Welcome to Volatility 411 for Equity Armor Investments, the portfolio manager of the Rational Equity Armor Fund. I am Joe Tigay. Let's get right into it. We had an expiration today. 1890 is the settlement for July, and that's an interesting spot. It's around 19. That would have been lower than any level in 2020 in the pandemic, but we are coming up a little bit. Lately, we have been seeing lower prices for the VIX. 16 has been a spot where we've been a lot lately, and however, we did see some volatility over the past week that drove the VIX all the way up to 25 on Monday. So coming in at 19 is pretty interesting to see all of that movement in the VIX. Now, we should not be so surprised to see all this movement in the VIX. I've talked about a high skew. That's people having less of an interest in the at-the-money vol than the downside vol. And I mentioned as the market goes slower, that will mean the VIX will go higher faster when you see a high skew. So that should not have been a surprise for anybody paying attention. And obviously the VVIX has risen because of that. Maybe that's catching up to that new reality. The VVIX, was in the 140 area, 130 area on Monday, and right now in 125, that's a lot higher than it has been. It has been hovering around that 100 level. So the volatility of the volatility is up, even though we are now in a new month. Of course, we're in August, and those futures are settling in right around that 20 area, coming in as we have market railing. So what's been the driver of this volatility? Of course, it has been bonds. The fact that this week and last week, tech decided to move in unison with banks, depending on which way the bonds move. So that's a lot led correlations to rise. When correlations rise, we get volatility to rise. That happens quite frequently, and that's led to this market volatility. We still are seeing that to a lesser extent. Banks doing very well on Tuesday and today, given the bond reversal. Bonds going lower now, yields going higher. Banks are doing fantastic. Tech is catching up, but they're still moving a little bit closer than they had been earlier in the year, where we had seen this really dichotomy of value versus growth on off, day in, day out. So I'm watching that. It seems like correlations are still a little bit higher than they had been, and we'll see how that plays out heading into the fourth quarter, where it usually is more volatile. We usually see things pick up after Labor Day. For Equity Armor Investments, I'm Joe Tigay.